Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Friday, November 6, 2020. Actually, what I plan to do is cover commodities, but I figured I'd squeeze in a quick update on the equity markets. These are the futures, the S&P 500 futures. Just again, a quick update to the post I made this morning. We did get those sell signals yesterday, as mentioned before the close. That was a break of these this minor trend line here on ES and a comparable minor trend line on NQ. You had the negative divergences. And again, I show these futures a lot for a couple reasons. Number one, they show well. You have different trend lines that and horizontal price support and resistance levels you don't see on QQQ because of the round-the-clock trading. And that's also, somebody mentioned this morning that the futures hit these pullback targets I had, which were the uptrend lines there, and at 34, 60, 50-ish level on ES. And they hit that. That was at I believe it was 5 a.m. And so the point is, it's another case for trading futures over ETFs because you have round-the-clock trades. They're trading, liquid as well. At 5 in the morning, most people aren't up at 5 in the morning, or at least not sitting in front of a desk, starting their day on trading. And with futures, you can put a buy to cover limit order if you're short. You can put a stop loss order. I had a member mention that TD Ameritrade now allows like 5 or so ETFs, including SPY and QQQ, to trade around the clock. I don't even have to look. I can tell you liquidity is probably nil. By meaning low liquidity, it means the spreads are large. And just like the regular after hours or extended hours trading session, limit orders only. So a limit order is good for exiting a trade. In other words, if you were short, you would have had a limit order just above the trend line and or that 34, 60, 50, 50-ish level, and that would have been hit. And you could have, theoretically done the same thing if you had round-the-clock trading on SPY or QQQ if you had a comparable level. However, what you can't do there is stop loss orders. And I like to, when I go to bed, if I'm carrying futures at night, I always have what they call OCO. One cancels the other order, and one says, if I'm shorted right here on the breakdown, stop loss is going to be above, somewhat above there, depending on targets, of course, and a buy to cover limit order at my price target. So one of two things going to happen. If the markets rip overnight and I'm wrong, my losses are limited because that stop loss order will trigger and at any time during the night if hit. And again, you have the liquidity to put those in. And then of course the limit order, and then when one's hit, it cancels the other, so you're not still, you don't do this, you don't have a standing order left in place if one of those orders fill. All right, so that's what we did. And you had actually, I made that post this morning, and you since then you had several opportunities to still cover at that trend line. We hit it again this morning a couple times over, and you can see I mentioned that we have a bullish crossover now on the PPO. Before it was turning up, and now it is in place. So there's a bullish crossover right on the zero line, right where it needed to be. What I mean by that is that PPO, one of my favorite trend indicators. I talk about it often. I know if you've been a member of the site, you heard me say it 1,000 times. It's not perfect, nor is any trend indicator, but it does a pretty darn good job of telling you or helping confirm what the near-term trend is. And that is the signal line, the 9 EMA. That's the white line, the last of the two to cross. And when it's below, the trend is bearish, as it told you it was there. And when you cross above and stay above, the trend is bullish. And not only that, that zero line right there in the middle tends to act as support and resistance during those trends. Yeah, there are periods where you get some whipsaw signals, although if you really follow it closely, they triggered these little, caught some or, a decent part of those corrections there and the rallies there. So that's that. And I just want to say that's all bullish so far. You had a minimum pullback targets hit, successful defense of support. You rallied off there pretty impulsively so far. PPO's turning up. So by every account I see here, that's somewhat bullish. I wasn't looking for this, I was only looking for a relatively minor pullback. I did give some additional targets on NQ if that level was broken, but so far, and I'm going to go to NQ now because that's really where I've been focused. Here's NQ. Similar to SPY, you had almost an identical technical posture. You had the trend lines, minor trend lines that were broken yesterday. There was your sell signal, floundered around for a while, but it played out, and it played out for a pretty good drop. It was, close to 2% or so from the sell signal. Hit the trend line last night, or close enough at, again, 5 a.m. But then after the open today, you had two extra opportunities, two other tests of that trend line, successful tests of the trend line, and so far we're moving above it. PPO turned up right where it should, right on that zero line, keeping this bullish trend intact. As I said before, not only does it act as a good trend indicator when you're above or below, but that zero line tends to act as support when tested from above, or resistance when tested from below. I'm going to say this, all in all, that looks bullish. It looks like a resumption of uptrend, a greatly needed correction. I mean, very near term, we're overbought. It's been a heck of a run since the elections. But I just don't have a good feel on this right now. Again, by all accounts, it looks like, and I can say this, that was an objective long entry, an objective time to cover shorts, reverse to go long, and we may certainly have more upside. We're not far off those old highs. I just, I don't know, call it gut feel, intuition, whatever you want to call it. Part of it might have to do with what's going on with the elections. Trump's crying foul with the Republicans, of course, filing suits across the board. I don't think that's going to tie things up. I don't think that's going to have a huge impact on the market, because look, no matter what, the status quo is in place now. The Republicans have kept the Senate, so you have a balanced House there, or Congress, I should say, and that pretty much gave the market a big breather, because it didn't have to worry about tax cuts. Had Biden had free reign, had they taken the Senate, then you'd be looking almost certainly at tax cuts, and the market doesn't like that. I'm sorry, tax hikes. So now what happens? Even if some crazy chance Trump pulls it off, wins, gets these recounts done and pulls it off, I still don't think it has much of an impact on the markets, because, when Trump won in 2016, there was that huge Trump pump, the huge run up, and that was pricing in everything that he had talked about doing and did. Tax cuts, deregulation, all that kind of stuff that's good for the stock market, no doubt. But I can tell you this right now, the chance of another tax cut following one that we just had, a few years back, is slim, especially with the, federal deficit ballooning. So, again, I don't think it's going to happen, but if somehow Trump gets reelected here, again, I don't see a repeat. I just want to say that, of 2016 to, 2017 and plus. So I'm kind of rambling here. I don't know. There's just something in this that tells me right now, sit tight, and that's what I'm doing. I'm gonna just hold off on the equity indexes and wait for the next objective long or short entry. Like we had, objective short pullback trade there. We've had a lot of trades here, and at this point in time, I'll hold off. I will continue to give you guys updates, because that's what I do. Let's look at QQQ and SPY before I move on to the commodities I want to cover. All right, so what I'm noticing here on QQQ, here's your uptrend line. Now, remember yesterday I said we didn't have much of an uptrend line forming on QQQ because we only had 2 reaction points. I think you can see where I'm down here. And now with that pullback today, we have an additional reaction. That helps to validate this uptrend line. So there it is. On the QQQ 60-minute chart, you have this uptrend line off the recent lows with now 1, 2, 3 reactions. In my book, it takes at least 3 reactions to validate a trend line. I always say, because any 2 points can be connected at random. So it's that third distinct reaction that helps validate it. And we also have, you can see here, I've added a downtrend line to my charts. That the previous all-time highs, reaction high here from about mid-October, and what we're doing right now. So, hey, if we break out above there, yeah, bullish, and then you only have this previous reaction high to take out, and then not much. I'll say this right now, there is just nothing but thin air right now between where we're at and new highs in the market. There's not any significant resistance. All you have is 2 previous reaction highs as resistance, and previous reaction highs should always be considered resistance, but again, it's not a lot. In other words, if you had a reaction high here and here and here, did this here, and you could draw a line like that, well, you have 1, 2, 3, 4, a lot of reaction points. I would say that's moderate to significant resistance. So I just want to say that thin air. The bull is in the ball is in the bull's courts to take it and run. Here's that same trend line on the daily chart. I'm going to just tighten it up a bit. And so we are, in a sense, we've already had a reaction. If we pull back, it'll even help to validate that. And what I'm talking about again is 1, 2, 3, especially if we pull back here, 3 distinct reactions, and then that's your trend line to watch. So we either break it now. We've been consolidating all day. That in itself is a reaction. I consider a reaction when you have a lot of upward velocity or momentum into a resistance level. A reaction I define as either a pullback and or a consolidation. This is certainly a consolidation. All green candles, and now we're moving sideways. So there it is. I'm going to take a shot here. You know me, I love to make these micro calls, and I'll tell you when I have confidence, high, low, medium. It's not the highest degree of confidence, but I think we're going to pull back here. I think we're going to go in and backfill those gaps, maybe come back down here to 283 on SPY, and then we'll look and see what happens. If we can hold there, come back up, make another run at the trend line, great. Then I'll be looking for a breakout above there and a rally up. I can also, as I pointed out recently, the PPO is also turning up and successfully defending the zero line here on the daily chart. There's your bullish crossover, the orange line above the white line, and there's the zero line right there. Different boards, sometimes I'll use a level slightly below that. But again, you can see the white line. I'm going to box it in for you here. The white line's the lassitude across. It pretty much says bull trend. Little whipsaw right here. You can say we're close enough to say that's still a bullish trend, bear trend. So it's a beautiful indicator. It works on multiple time frames in saying trend is bullish right here. You want to buy pullbacks to support. That's the MO of trading a bullish trend. In a downtrend, bearish trend, you want to buy kickbacks into resistance, like that snap back into the 50-day exponential moving average. Had a little reaction when you hit it there, and then the trend indicator flipped bullish. So that's where we're at. And forgetting about what I think may or may not happen, my little concerns about the market. Right now, the posture is bullish. Again, we don't have hardly any thin air between where we're at now and new highs. Take that trend line out. That's one less resistance level and as well as that previous reaction high. So I can tell you this, I cannot make a solid case for shorting. And if I had to, based on the charts alone, the only case I could make would be to be long right now. But the beautiful thing about trading, if it doesn't feel right, hey, go to cash. You don't have to always have a position. You don't always have to be long or short. And so that's my thing right now. And which, by the way, meshes with what I've been telling you for a while. Said leading up to the elections and after, that's what I said weeks ago, you're going to see this post-election noise. You're going to see volatility. Well, that's certainly happened. This is volatility at its finest. This was a sell-off before the election. This is a rally after. Remember, volatility isn't just stocks going down. It's also big moves to the upside. It's increased price swings in percentage terms. So we're still at that expanded volatility stage right now, and the dust hasn't settled. In fact, the election hasn't even been called yet. Here we are on Friday, days after the election. So, all right, that's it. Those are my thoughts. Those are levels to watch. On SPY, let's see, on the daily chart, you have the same downtrend line right here. This is your downtrend line, levels to watch, and I think I already covered that. There's I don't know why this line keeps drifting. There it is. That's the uptrend line on SPY, which has been broken. It's a 60-minute uptrend line. Again, not as many reactions as we have on the futures, but there's enough reactions there to validate it. So that's a little bit of a crack right there with SPY trading down below that trend line, but not too much. And you know what I'm going to do? We're looking at it. I'm almost 14 minutes in this video, so I'm not going to make I'm not going to do the commodities. That'll just be too long. I want to go through, and I haven't done it in a while, all the commodities I follow, at least all the ag commodities, and then a few others like oil and maybe one or two industrial metals. All right, so what we're going to do is cap this one here, and I'll cover the small cap since I haven't covered that in a while. 60-minute chart. If you recall, a while ago in the last few weeks, I had a downtrend line already on IWM, similar to the one I just showed you on QQQ and SPY. This is a 60-minute chart. That downtrend line was taken out. That's bullish. There's a breakout, and we didn't just limp above it. I'm trying to use a circle tool here. Boom. We broke out impulsively, and we're above that downtrend line. So that's bullish right now. There is also an uptrend line here on the 60-minute chart which we're testing. We're a hair below it now. And if we crack it, then you're probably going to get a back test of that trend line. And it's the bottom line, it's bullish as long as IWM remains above that downtrend line right there. And PPOs, curling over at high levels, so you could get a little pullback here. We're also overbought. But what tends to happen, not always, sometimes you get a one and done overbought reading, especially during a bear trend. In a bull trend, when you get overbought, what usually happens, not always, but usually, you get that extreme big overbought reading, and you might get a little minor correction like this right there. And what happens is you then put in divergence. You continue to rally and you put in a lower high. That's negative divergence. Lower highs on the indicators giving you negative divergence, then the correction sets in. And that correction was highlighted in advance with the sell signal right back there in October. And that was the drop that we got. So what I'm looking at, again, that would mesh with a little more upside here, maybe a near-term pullback in IWM, followed by another thrust up that ultimately might put in a divergent high. Wouldn't be till probably next week, obviously, if that. It's something like this, give you your negative divergence there. RSI puts in a lower high. So there's something to look at. So by most accounts I see, it looks like we have a little more upside near term in the markets, unless we just turn around suddenly. Maybe there's a news event or something like that. But it looks like the near term outlook here is more bullish than bearish to me. And RTY, small cap futures, if you trade those, same thing. I had a downtrend line there right here, which has been taken out. It was taken out impulsively, and same thing. This is almost identical to what I just showed you on IWM, as it should be. These are the small cap futures. There's a trend line that I had to take some liberties to because we had that quick swoon down, but other than that, there's quite a few reactions there that helps to validate it. And this is one thing that gives me pause. You have these 60-minute divergences, just like you put in on ES and QQQ recently, except they haven't played out yet on IWM. So IWM, if it cracks this wedge, could go down. If it can hold that trend line, great. If it breaks it, that's not going to be so hot for IWM. And I don't have the first support until all the way down to about 1592 right there. So that's where we're at. We'll leave it there. There was that divergent high again on ES and NQ. And the big question is that all we're going to get out of it? We did hit my minimum targets. And it's possible that we put in that divergent high. And look at this. One more thing, and this is, again, why I'm not so keen on chasing a rally here, is that any marginal new high, even if it takes out that trend line I just showed you on ES and SPY and QQQ, on this 60-minute chart, these indicators are lagging so much that you will have divergence anytime soon. That is not a guarantee you're going to reverse, but as I say, and I've pointed out quite a bit recently, you have to respect these divergences. I kept saying that back here. You have to respect that divergent low. Not a good time to short. If you shorted that low and you didn't cover, it cost you a lot so far. So we have the divergent high. We got a little correction off the little divergent high, and should we anytime soon make a new high, probably into, let's say, next week, it's going to be a divergent high right there. So there's something to watch for. And of course, the other big thing to watch for is this primary uptrend line. That's why I had it a little thicker than the minor trend line there. So we hit it. We got our expected reaction, on the initial tag, a bounce. And if we break it, with divergence, let's say next week or so, then that's going to open the door for an even bigger drop in both ES and NQ. NQ looks almost identical. So let me wrap it up here. So we'll keep this one just limited to the equity markets, and then I'll follow up with a video on commodities. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.